Most crypto traders thought the market was about to break higher again. Instead, they just got absolutely destroyed. Over $563 million in crypto liquidations hit the market in just 24 hours, with Ethereum and Bitcoin taking the biggest damage as overly aggressive long positions got wiped out fast. And honestly, this is one of the clearest reminders of how brutal leverage can become in crypto, because a lot of traders were heavily positioned for another breakout. Bitcoin had recently been hovering near the upper 70,000 range, Ethereum was holding relatively strong, and market sentiment was starting to lean bullish again. Then suddenly the market flipped. Bitcoin dropped toward the mid-$76,000 to $77,000 range, Ethereum sold off sharply, and liquidation engines across exchanges started triggering automatically. And once those liquidations start stacking on top of each other, things can get ugly very quickly. Because liquidation cascades basically force traders out of positions automatically. The exchange closes leveraged trades when losses become too large, which creates additional selling pressure, which then triggers even more liquidations. That is why crypto sell-offs can feel so violent compared to traditional markets. And according to the latest reports, Ethereum traders got hit the hardest with roughly $244 million in liquidations, while Bitcoin traders lost around $160 million. Now here is the part I think many newer traders fail to understand. This does not necessarily mean the long-term crypto thesis is broken. It means the market got overheated short-term. There is a difference, because crypto markets are heavily driven by leverage, emotion, and momentum. When everybody crowds into the same direction expecting instant upside, the market often punishes that behavior aggressively. And honestly, that is exactly what this looks like. Now, another major factor behind this move appears to be rising geopolitical tension and broader macro uncertainty. Reports surrounding Donald Trump's warnings toward Iran rattled risk markets overall, pushing oil prices higher and increasing volatility across crypto. And crypto still behaves like a risk asset during uncertain periods. So when macro fear spikes, leverage usually becomes the first thing to break. Now, despite the panic, I actually think events like this are important for the market long-term, because leverage flushes tend to reset positioning, they remove excessive speculation, and historically, some of crypto's strongest recoveries have happened after over-leveraged traders get wiped out. That does not guarantee an immediate bounce, obviously. Markets could absolutely remain volatile for a while longer. Bitcoin is still struggling around important resistance levels, and sentiment can shift very quickly in environments like this. But these liquidation events also remind people why risk management matters so much, because crypto can humble traders incredibly fast. Now, at the same time, while short-term traders panic over volatility, long-term infrastructure narratives around Bitcoin continue growing underneath the surface. That is part of why projects connected to Bitcoin scalability and usability keep attracting attention during these cycles. One example is Bitcoin Hyper, which is currently priced around 0.0136802. Not financial advice, but it has already been featured across CoinMarketCap, 99 Bitcoins, Bitcoin Magazine, and other major crypto publications. And honestly, the reason projects like this keep getting attention is because many investors believe Bitcoin adoption will continue expanding long-term, regardless of short-term market chaos, especially as institutions, ETFs, and governments continue integrating crypto infrastructure more deeply into financial systems. Now, personally, when markets become this volatile, I think security and flexibility matter even more. That is why a lot of people prefer using secure crypto wallets, like the Best Wallet app, during periods like this. Managing assets directly, staying flexible across ecosystems, and avoiding unnecessary exchange risk becomes much more important when liquidation events start shaking the market. Because in crypto, conditions can change incredibly fast. So bringing it all together, this latest liquidation wipeout was not just random volatility, it was a reminder that leverage cuts both ways. And while short-term traders just lost hundreds of millions betting on an immediate rally, the bigger long-term conversation around Bitcoin, crypto infrastructure, and adoption continues moving forward underneath all the chaos.